Inflation data out Friday that is closely followed by the U.S. Federal Reserve showed the smallest annual increase in more than 2 years. According to a report from the Commerce Department, the Personal Consumption Expenditures Price Index, the Fed's preferred inflation measure, advanced just 3% in the 12 months through June, the smallest annual gain since March of 2021. The so-called core PCE, which excludes volatile food and energy costs, also showed price pressures were easing. It advanced 4.1% annually, the smallest gain since September of 2021. A separate report from the Labor Department on Friday showed that wages, which have been sticky, rose 1% in the second quarter. That was the smallest quarterly increase in 2 years. The annual wage growth rate also declined, but it is still higher than rates seen before the health crisis. The latest signs of cooling inflation could push the Fed closer to ending its aggressive rate hiking cycle. The reports come 2 days after the central bank raised its benchmark policy rate another quarter point to a level not seen since the global financial crisis.
They are no longer forecasting a recession.
Fed Chair Jerome Powell said there was a chance that inflation could return to the Fed's 2% target without high levels of job losses. That has raised cautious optimism of a soft landing for the economy envisioned by some Fed officials, rather than the recession that most economists have been predicting.